RBI MPC meeting rate cut decision tomorrow. No challenges before Governor Sanjay Malhotra. The RBI MPC April 2025 meeting comes against the backdrop of external economic challenges like tariff war and U.S. recession risks, moderating inflation, and proposed changes in liquidity management. RBI MPC meeting April 2025. The RBI Monetary Policy Committee RBI MPC is conducting its THRE-a-day policy between April 7 and 9 to review the interest rates in the country. The comes against the backdrop of external economic challenges like tariff war and U.S. recession risks, moderating inflation, and proposed changes in liquidity management. The MPC's decision will be crucial in balancing growth and price stability amid global uncertainties. Hey race, what's expected on Wednesday and the challenges RBI Governor Sanjay Malhotra faces. U.S. tariff impact. The U.S. imposed a 26% tariff on Indian imports. According to Bajaj Broking Research, this is expected to reduce India's GDP growth for FY 2025-26 by 2040 basis points, potentially lowering it to around 6.1% from the RBI's earlier forecast of 6.7%. This may push the RBI toward further rate cuts to counter economic strain. U.S. recession risks. Even as the U.S. tariff war is going on globally, analysts expect America to slip into recession along with higher inflation. This poses risks to the global economy, including India. Inflation outlook. Retail inflation consumer price index for FY 2025-26 is projected at an average of 4.2, with quarterly figures at 4.5 Q1, 4 Q2, 3.8 Q3, and 4.2 Q4. Though these are manageable levels offering the RBI room to adjust rates to support growth if needed, they are still mostly above the target 4% level. Liquidity framework proposals. Indian lenders have suggested reforms to the RBI's liquidity management framework. Key suggestions include moving from the 140-day variable rate repo to an overnight fixed rate liquidity tool, adopting the secured overnight rupee rate SOR as a new benchmark, and reducing the cash reserve ratio CRR to ease liquidity constraints. From a macroeconomic perspective, a rate cut could put downward pressure on the rupee, particularly if foreign investors continue pulling out of emerging markets. A weaker rupee, while supportive for IT and pharma exports, may also stoke imported inflation, especially in energy and commodities, posing a challenge for the RBI, said Narinder Wadhwa, Managing Director CEO of Ski Capital. He added that the upcoming RBI Monetary Policy Committee MPC meeting is crucial as it comes amid rising global uncertainty due to escalating tariff tensions, especially following new trade barriers imposed by the U.S. A rate cut by the RBI in this environment would likely provide short-term support to Indian equities, particularly in rate-sensitive sectors such as banking, NBFCs, real estate, and auto. Lower interest rates would reduce borrowing costs and potentially stimulate consumption and investment, offering a cushion against global headwinds. However, the positive impact could be capped by global volatility, especially if the U.S. tariffs dampen global demand or lead to a broader trade war. Suresh Dharak, founder of Bond Bazaar, said, having said that, the upcoming policy would be tricky from the perspective of a volatile global economic scenario with the U.S. imposing a series of tariffs on most of their trading partners including India. The short to medium-term impact of the same is expected to be inflationary, which may potentially lead to U.S. rates rising. That in turn may put upward pressure on Indian SEC as well. Hence the RBI may decide to hold rates for now and let the tariff tantrum play out. RBI MPC decision tomorrow. The RBI MPC decision will be announced on the last day of the meeting on Wednesday, April 9. According to analysts, the RBI MPC is expected to cut the key repo rate by another 25 basis points BPS to 6%. In the previous monetary policy review meeting in February 2025, the central bank had cut the repo rate by 25 basis points, which was the first interest rate reduction since COVID times May 2020. To 6.25%. According to analysts, the February 2025 CPI inflation print falling well below 4 has cemented the expectation of a back-to-back 25 BPS rate cut in the April 2025 MPC meeting. In February, India's CPI inflation slowed to a 7-month low of 3.61% on the back of ease in the prices of food and protein-rich items. The RBI has been tasked to keep retail inflation at 4% or with a margin of 2% or on either side. The central bank cut the key repo rate by 25 basis points last month on easing concerns on the inflation front. How will the rate cut benefit borrowers if the RBI decides to cut its key policy rate by 25 basis points BPS on April 9? The equated monthly installments (EMIs) of home loan, personal loan, and auto loans will come down. The amount of reduction will depend upon the individual banks as to how much they pass on the rate cut on MCL-based floating loans. ICRA's Nair said, "We are apprehensive that tight liquidity conditions may delay transmission of policy rate cuts to bank deposit and lending rates." Ankur Jalan, CEO of Golden Growth Fund GGF, a Category 2 real estate-focused alternative investment fund AIF, said a low interest rate regime augurs well for economic growth. With inflation falling, the RBI must focus on accelerating growth amid the global headwinds. Going for 25 BPS rate cut will stimulate demand and give a spur to consumer spending across sectors including housing, which off late is witnessing some moderation after going through historic highs in the past couple of years, he added. Nan